Hi there, welcome to a special episode of Big Deal Today, where we have the top India team of EQT right here in our studios. Let me welcome on the show Jimmy, Hari, Piyush and Ashish right here in the studio. Gentlemen, so good to have you in CNBC TV18. Now, my first question, Jimmy, of course, last year was a great year for EQT in India with a large exit on the stock exchanges of Coforge. That's a big milestone. What's your focus now in India, and are you more optimistic for this particular year's investments than the last year?
So thank you, Nisha, and thanks for having us on the show. So to answer your question, I think we're a very thematic investor. By that, we mean we look for companies with, or look at particular trends and then look for companies that exhibit those trends. And you know, those typically result in companies with strong underlying growth and much lower downside risk to the business. In terms of a focus in India, it continues to be the same. We've been very optimistic on India. In fact, since 2013, we were actually the largest PE investor in India, and we've never looked back since then. And over the years, if you look at our funds, Fund 6, Fund 7, and Fund 8, there's been incremental exposure to India. Right. Today in Fund 8, we've committed capital to 9 deals in the fund. It's a $11.2 billion fund, of which 4 of those deals are in India and represent about a little more than 40% of capital committed.
Right. So that's a huge number. Are you increasing the pace for India?
Sure. No. So let's take a step back. I'd say, first of all, the way we evaluate investments as a firm, we run a Pan-Asia program.
Yes.
And each deal is evaluated bottoms up on its own merits.
Yes.
So we remain very optimistic on India, but like I said, 4 of the 9 deals in the firm are India. We expect to continue the same pace for now.
All right. So while you have your choice sectors, and we'll come to all of them one by one, but Ashish, financial services space is where I have seen your firm being very active in almost all the transactions. You did a big one also on HDFC Credila. What is your focus when it comes to the overall financial services space? There are many pockets to it. What for this year is a good theme for you for investment?
Yeah, thanks, Neha. So we will remain focused on 2 or 3 parts of financial services. One of them is affordable housing.
Right.
Other is financing micro and small enterprises. And third is wealth management. We will remain focused on valuation as well as making sure that the diligence checks out.
Right. And banks, you are already present in one of the banks, RBL Bank. But is that an area you think is an area of growth for EQT, for Indian banks? Is that a place you want to be more involved in?
We would expect banking sector to do well, but given our thematic buyout focus, I would expect us more likely than not to be more focused on the buyout opportunities in affordable housing and micro and small enterprises as well as wealth management. Banking sector by regulation doesn't open itself well for controlled investing.
Yeah, definitely there are restrictions. Now, Hari, big year for you last year with Coforge transaction, big exit there, and especially with the history that we saw in terms of the strategic sale for Hexaware that you tried to do, and the equity market wasn't ready for the block deals exit at that time. How far have we come as an Indian public market, and what is the confidence that private equity players like yourself have about the Indian public market?
So thank you, Nisha. So yes, the Coforge exit was a milestone for us. I would say Coforge is is an investment that we made in 2019, and we're very proud of what we have done with Coforge. The company has doubled in size in the past 4 years, and over that time, we had a 70% stake in the business, and we managed to bring it down to 26 and did a single day block of about 924 million. That really speaks to the depth of the Indian market, and we are very encouraged by the liquidity demand. And we're also happy with how the company has continued to perform even after we've exited. From EQT, we've always focused on exit. Like you said, 2021 was a big year for us with the Hexaware exit. 2022, we had Citius exit. So as fiduciaries, we focus on exits, and the depth of the market really helped us achieve that in Coforge. So we're really excited and really pleased with how it's shaped up.
Not just the depth, even the valuation played a very big role in the exits for the entire private equity community. Worth $15 billion of blocks really took place in Indian markets in the last year, which has been like quite path-breaking, and I'm sure that will really continue. In fact, even today we are seeing that. Now, Piyush, coming to you, of course, we spoke about the private equity, but infrastructure. You have a very differentiated offering when it comes to infrastructure. What are you doing in India? And you have two different platforms for it also.
Sure.
So how big is the scale and size now?
Sure. No, thanks, Nisha. I think just to correct, I guess infrastructure for us, more value-add growth.
Yes.
So it's not the typical yield investing that you see. A lot of our peers do in India. So we're looking at to grow businesses and transform them to a great degree. And I think in that respect, we usually focus on 4 sectors: digital, energy, environment, transportation, logistics, and social infrastructure. In India, we have 2 platforms right now. One in the energy space called O2 Power. It's a partnership with Temasek that we set up from scratch 4 years ago. And that's focused on looking at solar, wind, hybrid, battery solutions, serving utility and serving corporate clients, large corporate clients. The other one is through a portfolio company of ours that we own out of the US called EdgeConneX.
Yes.
EdgeConneX has partnered as part of its growth strategy into Asia, partnered with Adani Group, and is looking to build ground up, serving hyperscalers, global cloud players in India.
Right. So when we talk about data centers, how much is the potential for growth? We are still very fragmented and very small in this.
Yes, I think the potential is just starting. We talk about generative AI. You talk about everything that's happening around the world. So I think the amount of data usage and the pandemic was an example of how fast data consumption grew and has stayed at that level. So it's continuing to grow. In addition to that, as we have more data localization laws come in, both in India and anywhere else, the need to have these services and these cloud stores, data stored in domestic markets is super important.
Yes.
We actually see a long pathway and runway for this, and we're just starting from our perspective.
Right. And you're in very interesting spaces, and it's the global pool of capital that you can leverage on. We'll talk more about that. But Jimmy, in terms of the strategy as well as offerings, you have 2 very important areas that are covered. When we talk about the sectoral play, which sector do you think is going to be a more active and interesting sector for this year? All of them are sector specialists, so we'll talk about each one of them. But according to you, what is really looking like the potential areas?
So again, for us, we are bottoms-up investors, and the 5 sectors that we've been focused on as a team and as an office are tech services, healthcare, pharma, financial services, and industrial tech. I'd say, it's all these opportunities are cyclical, but we're seeing equal number of opportunities in each one of those areas as a team and as an office.
Right.
So it's very hard for me to pinpoint which way it's going to go, but just in terms of deal size and capital deployment, I'd say, our expectation is we'll probably deploy another $5 billion in the next 3 or 4 years, maybe even more. So far, we've done $2 billion in the last 10 months. So I'd say, and those 2 are one in financial services and one in healthcare services.
Yeah, both big checks.
Both
bold, bets that you made on both of them. And you're saying $5 billion in next 3 years is what you're going to invest in India.
That's the expectation. Again, it all depends on the opportunity, but that's sort of the expectation.
All right. So as per the growth potential right now and the strategy right now, that could be a possibility that you're looking at.
Yes.
What are the key drivers for India in your view? What is it that is working at this point?
Sure. So I'd say 2 or 3 things. I'd say, first of all, a lot of the structural policy changes the government has made has really sort of unlocked India's potential. I'd say, implementation of GST, investment in the digital stack, like UPI, Aadhaar, the bankruptcy and insolvency code. A lot of these things have sort of just unlocked the potential for India, and we sort of see the market booming and growing, and that's sort of enabled the emerging middle class to keep looking for services like healthcare services or education services, and we're sort of seeing a lot of those opportunities come up.
Right. So lots of opportunities in many areas of investment. But, you're under your choiced investments and sectors of investment, there's certain areas where we haven't seen as much interest so far. So we'll probably pick your brains on all of that when we return after a very short break on Big Deal. Stay tuned.